Well, hello there again. It's day 2 of my challenge for YouTube. Edwin here from Chile Capital. Today, I want to talk about a couple of things. The first thing is my opinion that the West in general, all the countries of the West, that is Europe, America, Canada, Australia, New Zealand, they're pretty much, as a collective, are dishonored, as in they have no honor left. I was raised to believe in old-fashioned values. You know, your word was meant to be your bond. Whatever you said, you had to do. That was the way for, I guess, thousands of years. Humans cooperated, and normally the win-win philosophy would see you through. Not anymore. Politicians in Australia and around the world, but mainly in the West, they make me sick. Liars, thieves, without any morals. It has never been more clear that they do not care about us, the masses. On the contrary, their only function, presently it seems, is to make matters worse. Take the current war between US, Israel and Iran in the Middle East. Most intelligent people will quickly come to a conclusion that US cannot beat Iran. Well, maybe they have a tiny chance, but most likely not. So the question is, why do it to begin with? Would it be possible that all of it is coordinated between all parties, even knowingly? Or maybe they just manipulated into it. Nonetheless, the hidden hand is orchestrating another crude oil shock. This time is going to be known as the crude oil shock of 2026. Remember the ones in 1973? Well, I can't remember it because I was just a baby. Then there was the 1978 and 1980. We're going to go through something similar, but is it possible that this is just a smokescreen and they're going to use that to justify to raise the rates? The rates that need to be raised because there's a giant pile of steaming government debt that needs to be devalued. Because, ladies and gentlemen, we are in the middle of debt and fiat devaluation. And they're using the crude oil as a lever, as a scapegoat to justify the increased rates. So we're being squeezed from both sides. Inflation's going to go up because crude oil is going up, whether it's engineered on purpose or some other way, it doesn't matter. The joke is on you and on me. The hidden hand doesn't care. Currently, there seems to be no future in the West. There are many reasons. But the way I see it in Australia, We have a corrupt political system that does not care about us. The representative system, where representatives can be influenced and bought off. America's very proud of that tradition. Also, we have a lazy population in Australia. Nobody seems to want to work. Why would we want to work when we get taxed to death? Manufacturing base in Australia is also either dead or dying. Everything's outsourced to China. We can't compete. This was all done by design. 1970s, 1980s, the beginnings of it all. We lost it all. We're like frogs in a boiling pot. It's too late. And the big one is the real estate Ponzi. Prices can never go down. But the interest rates are going up. The inflation is going up. Who's going to pay all those $1 million plus mortgages? From where? AI is replacing thousands of jobs. This is just the beginning of an absolute crazy wave of stagflation, where economic growth is non-existent, inflation is high, and the interest rates are going up. Can it be possible that under those conditions, real estate in Australia is going to, if not crash, cool down? If it is going to crash, or at least cool down, our banks are going to be in trouble. And that makes me think of an excellent trade idea. And why don't I talk about it using my charting software, TradingView, and discuss Commonwealth Bank, and in particular shorting it.
Hello and welcome to Technical Analysis Corner with Chile Capital. What we have here is a monthly chart of Commonwealth Bank of Australia covering its the whole history on a stock exchange. From the early 1990s all the way to now, what we see is the chart that shows share price appreciation, basically very consistent. And really, in reality, Commonwealth Bank of Australia is the leading bank in Australia, and it has benefited from the real estate boom that we've had in Australia for the last 3 and a bit decades. Almost constant growth in loan origination and real estate booming year in, year out. Now, why did I want to show you the chart of CBA? Well, if we look at the daily, I believe we can see some very interesting chart patterns developing. Last year in end of June, beginning of July, CBA put in a high of $192, which is over here. Now, as is often the case, there is a chart topping pattern put in place, such as head and shoulders. And I believe you can see it here. Let me show you by drawing. Here's one shoulder. Here's a spiky head. And here's the other shoulder. Now, let me take this out of the way. And here's the neckline. You can see the shoulder, head, shoulder, and now here it was broken. And this is how you work out the targets for this pattern. You draw from the top of the head a vertical line to the base of the neckline, and then you move it along and you place it where the break of this pattern takes place, where the neckline gets broken. And as you can see, that target of approximately $163 was made, at least on several occasions. Now, initially, the share price went and retested the neckline and, for good measure, tried to confuse everybody and wanted to go higher, but then it succumbed and made target over here. Now, as is often the case, chart patterns can be observed on different scales. So it's like a pattern within a pattern within a pattern, or a fractal. And so what I was looking for a bigger head and shoulders in place, and I think I found it. Here first I was looking for that pattern and I drew a horizontal line, but perhaps just as with the smaller head and shoulders pattern, we need to adjust this line and we probably need to draw it like this. And I hope now you can see a larger head and shoulders pattern developing as we speak. So let me draw again and to highlight. Here's one shoulder. Here's complex spiky head. That's going to be tricky to draw. And here's the right shoulder that is still developing. Now, let's say hypothetically that this head and shoulders triggers. How do we calculate the target? So let me drag this across to the top of the head, and then it's a vertical line all the way to the base of the neckline, and then we grab it and drag it across to wherever the break will take place. Now this is just an estimate at the moment because the chart pattern of head and shoulders hasn't triggered yet on this scale. So let's have a look at the whole thing in the weekly because it just gives us a better overview. So here, hypothetical, it's sort of indicating $112 target. But here's an interesting thing about this chart. I have an indicator here on the right side that is a cumulative volume for every price point on the chart. And as you can see, most of the action has taken place around the $101 mark and below. Whereas everything above, these are very much smaller columns, which indicate that there's not much support or resistance in this area. So if this head and shoulders pattern gets triggered, it is very likely that it will perform to target and maybe even overperform. And fundamentally, it may be that we see liquidity crisis on multiple levels, high inflation, and interest rates going up in Australia that may trigger the reassessment of the loan book for all the banks, and therefore will bring in the panic sell-off in the banking sector. And I expect this head and shoulders pattern to complete, trigger, and hit its target of approximately $110. But I believe that it may even overperform and go, and it may even dip under the 3 digits. And that's my trade of the week. I believe that if, personally, if one was to target CBA out of the money puts, quite like heavily out of the money puts, you can make serious coin there by buying the puts, and then long dated puts. Yeah, please comment below. What do you think? Is this a good trade in your opinion, or am I seeing things that are not there? Thank you for your attention to this matter.